The small cap dividend portfolio key takeout was really the corporate activity. I mean, we've been running these portfolios for something like 4 or 5 years. We've run 9 portfolios, there's been 12 takeovers. So companies both big and small are looking for growth. Companies both big and small are looking for cash flow. And it just so happens that dividend paying small caps provide that. Well, the June 2020 dividend portfolio was particularly interesting because it was at a very uncertain time where companies were cancelling interim dividends, from the period to 31 December 2019. So COVID shutdowns were in focus and it was a difficult period. So fundamental analysis really came into its own. So fortunately, 13 of the 14 companies we selected paid dividends in line with what we'd forecast. And the one that didn't, AQZ Alliance Aviation, actually produced record growth through an acquisition. So the point is that all these companies had good balance sheets, solid cash flow, and that paid off. In dividends, we look for a company's capacity to pay the dividend. So that means looking primarily at operating cash flow. Now, we look at their fixed charges so that a company can meet these fixed costs and pay a dividend and reinvest. Now, reinvestment's where the big growth occurs because you're getting that compounding effect from the return on equity. And that's why you're investing in small caps. And while you're investing, you're getting paid income along the way. So you're getting the best of both worlds. Well, dividends matter really because they're taking risk off the table. You're getting access to company profits. But in Australia, they matter even more because of franking credits. Franking credits can boost an Australian taxpayer's income by up to 40%, so it's a big deal. The secret benefit of dividends is actually averaging down. Averaging down doesn't always work. It doesn't work when sentiment plays a big part in the valuation of a company, say a tech company that doesn't produce any earnings, because then you're relying on a greater fool argument to an extent. Sustainable dividends provide evidence that an asset base is producing, profit growth. And this is why, when stock prices go down, you can have more confidence that buying more stock can reduce your average price and actually increase your portfolio's value over time. Particularly in the case of Austal, where, they get hit with a bad profit warning, but over time, that company's asset base is going to deliver. Diversification really works, especially when it comes to small cap paying dividend stocks. I mean, in the last portfolio we built, it's had an annualized return of 50%. These two portfolios had 11 and 14 stocks in them respectively. And diversification really does reduce the impact of a stock that's not performing as well. One of our earlier portfolios only had 8 stocks and has been an underperformer. But overall, the portfolio's strength has been that diversification, and we've really outperformed the Ordinaries Index by quite a magnitude, partially because we've been producing quality stocks, and those quality stocks have been in a portfolio. Final tip we'd have for small cap investors is that when you're looking at a portfolio, we said diversification is important. But what's just as important as diversification is picking quality. So quality stands the test of time. You're looking for stocks with strong balance sheets. You're looking for stocks that produce revenues. You're looking for stocks that from those revenues produce profits, because this will stand the test over time. What you're looking for from this portfolio is to generate growth and get paid for it while that's happening. What we've established is that dividends are important, they're really important, but they're nothing compared to good fundamental analysis and stock picking. And that's where Under the Radar report can really help you. We can help you pick stocks that might not pay dividends, or they do, but the main thing that you have to know is that these stocks will be around in the future and will produce income and growth over time.